Hi, hello friends. Welcome everyone to Option Omega, India's largest retail option traders online conference. I am Ashok Devanampriya, the CEO of Traders Gurukul and also the host for your today's program. It's a great pleasure and honor to welcome every one of you to the third edition of this beautiful options learning series. Before I kick off the program, I would like to thank our media partner Money Control Pro, the largest financial portal in India with millions of daily readership on their website, who helped us to reach a wider audience in a short period of time. Meanwhile, I would also like to appreciate and thank our title sponsor Espresso from the family of Sher Khan, one of the leading discount brokers in India with millions of investors as their customers. As we converse, Santosh, you are still on mute. Please see if you can unmute yourself. I would also like
Yeah,
to thank our platform sponsor Rigi, a platform mainly for creators, influencers, and celebrities to grow, manage, and monetize their community. The speaker for today is my very good friend Santosh Pasi from Mumbai. He is the founder of Pasi Technologies and also the co-founder of an algo firm called Sonic Alpha. He has been an options trader, trainer, and he has been in this domain for more than 14 years now with extensive experience in options trading with main focus on volatility. He's a non-directional option strategy trader considering volatility as an edge. He successfully manages the Option Oracle tool, the option strategy analytics software widely used by most of the option traders in this country. Well, he's going to empower us today with his special topic, understanding option chain page and OI analysis. Dear Pasi, on behalf of Traders Gurukul, Money Control Pro, Espresso, and Rigi, I extend my warm welcome into this program as an elite speaker. Go ahead, my friend. The stage is yours.
thank you, Ashok, and thank you, Traders Gurukul team. Okay, this is my third presentation in Options Omega. Okay, so I'm being with them from the first session. Okay, today's topic is talks that would be option chain. It may look very simple, okay, but this is a kind of the more you dig into that, you're gonna get a lot of other information. So we're gonna just go and see the option chain page. This would help the new traders as well as the traders who are trading the options for a while. It may add something new to them. Okay, and on the top of that, we're gonna see OI analysis. Before that, that's my short introduction. As Ashok ji said, that I'm founder for Pasi Technologies and co-founder for Sonic Alpha. Okay, let's quickly move. This being a regulated market, and so that's disclosure and disclaimer. Also, just to note that I'm a SEBI registered RA, so all those disclosures, disclaimer would fall in place. Okay, so this is for the education purpose. That's it, and nothing advised to trade. Okay, so you need to be in touch with your financial advisor before taking any trade. Today's topic would be we're gonna see the option chain page, and I would love if you guys can put a lot of inputs in the chat. Okay, so we're gonna see the option chain page. I'm gonna ask you what you guys gonna see over there. Then we're gonna touch base. What is the difference between OI and volume? It may be a kind of a old basic thing for a lot of guys, maybe, but we're gonna just touch base once again, and then we will see what's the difference between OI and the change in the OI, and then we would jump into a put call ratio things, and then we're gonna try to identify based on the put call ratio whether it's in the bullish trend, it's a sideways trend, those kind of things, and then we would try to identify support and resistance. Okay, so that's again using the OI data, and we would touch up a lot of time. You might heard the terms like build up, covering, and unwinding. So those we're gonna see, and finally limitations and questions and answers. Okay, so that's agenda for today. So guys, this is what I hope you guys would have seen this page. Okay, if you guys are trading options, then I'm sure you might have seen this page. Okay, so just to make a kind of interactive sessions, I'm gonna ask you what you're gonna see. What are the different things you see on this page? So maybe just can you put on the chat, guys? So let's start from the top. What do you see at the top? uh, uh, I'm not able to see the chart. Okay, somehow, guys, are you able to type in the chat, or maybe Ashok? Are they allowed you to put questions on the chat, or it is in the some other section?
The questions come in a different section, so please go ahead with your presentation. Okay,
Okay, okay, no,
because
yeah,
the
no,
question and answer panel is elsewhere. There'll be a few questions which might come on this one
okay,
also.
okay, no
Okay,
worry, okay,
all
no,
right, thank you
yeah.
very much.
Yeah, so let's see here. So when once we go to NSE option chain page, we're gonna see a lot of things over here. So let's start from the top. Okay, so here we're gonna see that what is my instrument name. Okay, so this could be your indices, or it could be your stock things. Okay, then you're going to see the expiry date that you can select, and then the most important thing is what you're going to see, what is the LTP price for the underlying. So these are the very critical things that you have to see. Then you're going to see on the left hand side, you're going to see information about the calls, and on the right hand side, you're going to see the information about the put. Okay, on the top of that, if you see, there are two colors are there. So one is a kind of a yellow color, and then we see a white color. So the yellow colors are nothing but we call it in the money, and the white colors are nothing but we call it out of the money. Okay, so whenever you see the yellow color, you just have to say this is in the money. Okay, and whenever you say out of the white color, that means that's out of the money. Wherever you see that one yellow and one white color intersects, okay, so that area we call it a ATM. Okay, so based on the rules, I mean, if you go technically theory wise, there may be different rules, but just for a purpose of understanding, we will consider both as a ATM. So in this example, we're going to consider 13,650 as well as 16,400 as ATM. Okay, next, if you jump over here, you're going to see at the center, you're going to see the strike price. So this is what a strike price for Nifty. Same way, if you trade stocks, the indices, there may be a difference of 50, maybe a difference of 100, maybe a difference of 10 based on the underline. Okay, and the current ATP price of that underline. Then once you start, the most important thing is you have to see the LTP. So what is the LTP for different strikes? Okay, so for the call size, as you can see, on the in the money it will be a bigger number, and as you move towards out of the money, it's going to reduce. Okay, so this is what the behavior of the in the money, I mean the LTP, LTP. And if you consider delta, that would again going to reflect a similar things. Okay, same way you're going to see the same thing on the put side. Okay, so that's the LTP, but here the LTP for the in the money would be always higher because it has some value versus out of the money. It's going to reduce as we go towards out of the money. Okay, this particular area we're going to call it in the money. Okay, so let me see if I can change the mouse pointer. Okay, so let me see now. Okay, and as you move further up, so we're going to call it this as a at the money, further here in the money. And if you move further up, we may call it technically a dip in the money. And if you move further up, then you're going to call it a very deep in the money. Same way for the out of the money. Initially few strikes, you're going to call it is out of the money. And if you move further out, you may call it as deep out of the money, and maybe very deep out of the money. Next, a few important things. Let's start one by one. So one is OI. So OI basically means the open interest. So how many contracts are currently being open and not yet been closed? Okay. So here, if you see the numbers, they vary, but the most of the time you're going to see that out of the money would have a bigger numbers compared to the in the money. Okay. So that is you have to see where is the biggest number over here. So we're gonna in the latest slide we're gonna see what is the possible use of those OI numbers. Okay. So this is a number of the contracts that is still open, that is not at squared off. Okay. And if you start, say tomorrow you're going to start, this numbers would start from the day very close today, and tomorrow is going to start with the same number, and then it may change, it may increase also, and it may decrease. So remember your Y may increase or may decrease. Okay, at the start as the market progresses. Next one is a change in the Y. So at the start of the day, the change in the OI is always zero. Okay, so as soon as the market starts at 9:15, if you go and see the NSE option chain page, then it's going to say that change in the OI is zero. As the day progresses, okay, it may start increasing, as you can see over here, or it may start reducing. Okay, so here it may go into both the direction. So OI may increase, OI may reduce. If a OI is reducing, it means a lot of guys, they are closing the contract and they are either just closing this trade, or maybe roll over to the further strikes, or maybe roll over to the other series. That could be a possible thing. Okay, Next one is volume. Again, volume we call it like a daily wages. So at the start of the day, it will be always a zero. Okay, at 9:15, and as day progresses, the number would increase. Okay, so remember here, in case of the volume, the number would always increase. Versus in case of change in Y, what numbers may increase or it may reduce. Okay, but these numbers would always increase. Okay. Next, most important thing for us, option trader is IV data. So that means implied volatility. Okay. So it means what is a typical volatility for a particular strikes. You can see that a lot of strikes would have some kind of volatility. Few strikes may not have because either it is discounted or may not be traded on that particular day. Okay. So here, if you want to calculate, hey Santosh, I want to know roughly what is IV for, say, this underlying Nifty. Okay. In that case, you may say, hey, we can see at the money that it is around 13. I can say it's around 13.87. At the same time, over the put side, I can say it's around 18 and 18.96. You have to take the average of all the four. Okay. So average of all the four would be maybe around 16. So you may call it, hey, Santosh, the IV for the Nifty is around 16 or maybe 16.25, something like that. Okay, so that is a if you would just go with a very simple basic calculation, you can say that this is typically IV for today. That is a 16.25. So you have to just get the combination of all these two numbers over here and two numbers over here, combine that, take the average of that. Okay, so that is what IV. Don't go for the like in the money IVs or for the out of the money IVs. That will not give you the right picture. So for the IV calculation, it is always recommended to use ATM strikes. You may use three ATM strikes up, three ATM strikes below, or you may use just one ATM strike over here, one ATM strike over there. That is allowed. Okay. Next, what you say? A change. Okay, so this change is basically a change in the LTP compared to the yesterday closing price or maybe the last traded price. Okay, last traded price means assume that some particular strike which is not traded yesterday. In that case, whatever is the earlier traded price, it's gonna compare with that and you're gonna say the change. Most of the time at the money or the out of the money, it would be a today's price. But if you go deep in the money, then sometimes it is giving you the wrong picture. It may be because that strike is kind of illiquid and it is showing you the price of the earlier traded price. That may be a day before, maybe a 2 day before, maybe a 3 day before. Okay, similar things you're going to see for the put side. And if you're trading the option, then you have to consider these things like bid price and the ask price, and you have to see that the difference between both the are as low as possible. Okay, for example, if you start
Okay,
with
Pasi
yeah,
sir, there is a
yeah,
request from the audience. They're requesting
uh,
you to go a little slow.
okay. Okay, no worries. Okay,
Okay, yeah.
I'll go slow. Yeah. Thank you for that. So if you start OI for some 50 strikes, okay. So if you see here, that's a 465 and 481. So if you see the difference is around 15 rupees for instrument, maybe for the price of 465. So that is a cost of this trade, okay, or cost of this transaction. In this case, I would avoid trading this particular strike, okay. But if you consider a strike which is ending with the 100, for example, this one, then difference is hardly like 2 rupees difference versus the number which is bigger than this. Okay, 465. Even if you see 15,800, the difference is hardly like maybe 2 rupees or maybe 1 rupee is a difference. So whenever you are trading Nifty, then normally I say avoid a strikes ending with 50. Okay, same way if you're trading a bank Nifty and especially if you're trading the monthly series, then initially I say avoid 100 strikes, 200 strikes, 300 strikes, 400 strikes. Then go and only trade maybe 0 strikes or 500 strikes. Okay, so that is what we normally recommend. Same way if you're trading stocks, then you have to identify this. Okay, that what is a difference over here? This can be identified using the OI over here. So if you see OI here, so let's say 800 series, you're going to see that it's a bigger number, but 50 strikes, the OI is less. If you're going for 100 strike, again, the OI numbers are bigger. If you're going for 50 strike, the OI is less. If you're going for another 100 series, that's a bigger number and that's a smaller number. So it means if you're trading Nifty, then preferred strike is always the strike which is ending with double zero. Okay, that is what you're gonna see. Same thing if even if you go out of the money, you're gonna see that feature. Okay, so let me go and show you the live number, and we're gonna see for the bank Nifty and for the latest page of Nifty. So let me quickly go over here and let me show you for Nifty first, and then we'll go and we're gonna check for Bank Nifty. Okay. So as you guys can see over here, this is a Nifty page, okay, and we're gonna skip. This is a strike that is expired today. Let's go for the next series, that is 28th of July, okay, and you can see over here, okay. So I hope you guys can see my screen. So any strike which is ending with a 00, you can see that over is a bigger number versus 50 is a lower number. Again, Y is 00 is a bigger number, and then 50s are lower, then a bigger, lower, bigger number. That's going to continue. Okay. So, guys, can you guess? Okay, this is a question. You guys can reply me later on the chat that why the strikes with the hundreds are showing the higher OI, okay, and the strikes with the 50s are showing you the lower OI. Okay, so that is a kind of a question. Let's see. Okay, and let's go ahead and see if I want to see Bank Nifty, then what would be possible strikes? Okay, that I should always trade and avoid the other strikes. Okay, so let me show you that example, and we will go to a Bank Nifty over here, and let's go for some odd strike. Okay, if I go for say a monthly strike, you may not see that big difference, but technically there is a difference. Okay, if you just go and see the strike which is ending with 00, can you see a bigger number? The next four strikes are smaller number. Then again 500 strikes is a bigger number. Then another 400 strikes are the smaller number. It means strikes typically in the workshop I normally call it only 500 node and 1000 node will work in case of a Bank Nifty. Other nodes you have to ignore it. Okay. So that is what we're going to follow it here, and you can see here. If you want to see a much easier picture, go for some odd series. Okay, so let's go and go for the 4th August series. And here you're going to see that it may reflect the right numbers easy. Okay, you can identify easily. Like here you can see that 35,000 is a big number, then 35 500 is a big number, then you can see 36 is a big number, then you can say 36 500. So you can easily identify that strikes which are either 1000 or with the 500 are having a higher OI. If it is having higher OI, then what it means, the BDAX price would be less. As you can see over here, the BDAX price would be much lesser compared to the other strikes. Okay, so let's go and see similar things for some stocks. So let me go and maybe show you something. So let's go and let's see ICICI Bank or maybe Reliance. Okay, so let me go quickly here. And Reliance, I think the result is tomorrow. So let's quickly see what are the strikes that are good for the Reliance. Okay, and you guys have to guess before I answer that. Okay, let's go to Reliance, and that's a Reliance. Guys, can you guess what are the strikes which are liquid here? Take a pause, 30 seconds, and tell me what are the strikes that are liquid that should be traded, and the strikes should be avoided as much as possible. Okay. So here, if you notice that the strikes ending with the 100, okay, are more liquid. As you can see over here, the 2500 is around 18,000 bucks, okay, 18,000 count. And then if you're going for 26, again a bigger number, but the rest are the smaller numbers. Again, here you can see that the smaller numbers are there, and this is a bigger number. So you have to see these patterns. Okay, sometimes this pattern could be with a difference of two strikes, sometimes with a difference of three strikes. Okay, so based on that, you have to go and trade the strikes which are liquid enough, so that the beta splits are much easier. At the same time, if market goes against you, then if that becomes either deep in the money or very deep in the money, still there would be chances that you would get out of the trade easily compared to some odd strike. Okay, for example, let's say I take a trade and I go stuck here with the 2260. Okay, in that case, see here the bid and ask price, guys. I mean, you're gonna say, hey, man, I have to wait, otherwise I have to square it off at 61 or maybe 231. Versus if you would have traded a 2200 strike, then you can easily get out of this trade. If you would have traded a 2300, you would easily come out of this trade. Versus 20 to 80, it's very difficult to come out of this trade, or maybe even to get the entry here. Okay, so that's the reason you have to identify the strikes which are liquid and that you have to trade. Okay, and the beauty of that, the bid ask spread would be much narrow compared to the illiquid strikes. Okay, so let's move ahead of that. Okay, next one is question comes, what is OI and volume? So a lot of guys do chase me that santosh, this is I can see there is a OI and there is a volume. I can see that 123 is a OI and volume is 27. Okay, So remember here, OI means kind of a salary. Okay, it is like it goes over the month, or over the day, over the day. Okay, versus a volume is kind of a daily wages. Okay, so here I mean every start of the day it will be always a zero, and as day progresses, this is the number of transactions that took place in a day. Okay, so initially it will be zero, and as the day progresses, the number would increase. Versus OI is number of the contract. Okay, because option trading is nothing but it's a contract between buyer and seller. So if the new contracts are being added, then this number would increase. If the old contracts are being closed today, then this number would reduce. Okay.
Friend, this is the first event ever done by Gurukul in Bangalore. All right, this is our annual residential conference happening in Bangalore in the month of September over on 2024 25th. The beauty of the program, it has been designed three factors in mind. Number one, extensive learning. Number two, there will be a massive championship. And number three, extensive competition among the traders and learners community. The way we have designed this program, because there are so many events that are happening across. However, we wanted to focus on three. Number one, delivery. Number two, pricing. Number three, value proposition. When it comes to pricing, this is the cost one for all the event that happens in and it has been aggressively priced. We have showed there are speakers across different topics. Yes, there are speakers who talk about positional monthly, weekly strategy, day, also other strategies. There are people who talk about price action, profile, WD GAN, options, quotes, and various other topics which give extensive experience and in terms of strategy exposure. Next slide, please. So we needed to keep the pricing so low at the same time give expensive value for the participant. This is happening in the five-star property in the northern side of Bangalore city, close to the airport. In fact, pricing is so low at the same time, what the price people pay, that price would be the entire will be reflected in the brokerage credits, which officially means this product will come more or less cost. All right. Next, so the price 25 for the 100 spent. Of course, we already Santosh is gone. For already covered more than 100 seats. We have roughly less than 100 seats. However, for option Omega, the same price will go. Details to www.conclave.com. Contact my manager on the number given, and you will get at the same price, and the whole money that you pay will be funded in form of brokerage, which officially makes this program absolutely some of the best and best experience. Trying to build this program as an alumni, all right, because we don't want to be an event company going across the country running programs. Always one program per year, always in that our motive and mission, and we want to make this program is really catchy program, best edition all the and in community. Please, all here is this trend interpretation we can do when P range between 0.8 to 1.5. Repeat, what trend interpretation we can do when P range